One of the most lucrative fintech endeavors nowadays is trading cryptocurrency. It can be highly speculative, therefore understanding the trading instruments at their disposal may aid investors in making wiser and less hazardous choices. In today's video we will learn about the different order types in crypto. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex and many more. So watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So let's begin the video. What is an exchange order book? A list of open buy, bids, and sell, asks, orders for a particular trading pair is known as an order book. It can be recognized as a marketplace where anyone can participate by putting in a bid for an item they want to purchase or asking for a price for one they want to sell. The open order remains in the order book until it is canceled, someone accepts the bid, or in the case of a sale, someone agrees to pay the asking price for the particular asset. Each trading pair will have its own order book, such as BTC/USD or BTC/Ether, ETH. Different order types give traders a great deal of flexibility when buying or selling cryptocurrencies, whether they wish to set a target price for buying or selling or specify the timing of the transaction. Orders can exist in a futures market where contracts can stipulate that an order is fulfilled at a future date, or in a spot market where cryptocurrencies are traded for instant execution. Stop orders allow traders to specify the price at which the order should be filled and are typically configured to limit losses if the price of an asset falls sharply. Market orders. A market order is a trader's directive to buy or sell a cryptocurrency at the best rate currently offered on the cryptocurrency market, with immediate execution. It is regarded as the most fundamental and straightforward kind of crypto order. Limit orders. An instruction to purchase or sell a cryptocurrency exclusively at a predetermined price is known as a crypto limit order. The trader who can wait patiently for a price objective to be attained is the one who should use it. Stop orders. Once a cryptocurrency reaches the stop price, a stop order is created to buy or sell it at the current market price. The order then changes to a market order and is filled at the following market price. Stop limit orders. A sophisticated order type is a crypto stop limit order. In order to reduce risk, it combines a stop order and a limit order. Stop limit orders are frequently used by traders to protect gains or restrict losses. Stop loss orders. Because it automatically cancels a position when the price hits a specific level, a cryptocurrency stop loss order is a crucial instrument in risk management. What's the time in force for orders? The amount of time a crypto order will be in effect before it is executed or expires is specified by the time in force instruction. Especially if they use crucial trading indicators like moving averages, which are extremely time sensitive, traders can be consistent with the structures and forecasts of the cryptocurrency market by setting up an order according to particular time restrictions. Types of time in force orders. Good till canceled. This crypto order will be entered into the order book and held there until it is carried out or canceled. Immediate or cancel. The order can be placed by cryptocurrency traders for quick execution. It will be automatically canceled and removed from the order book if it is not immediately filled. With this kind of order, the trader can designate a minimum quantity that will be filled right away. Any further quantity that is not filled will be instantly canceled. Fill or kill. Fill or kill suggests that the crypto order will only be filled if the total amount can be matched, in contrast to the preceding IOC order. It will be immediately canceled if that doesn't happen.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.